Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Greentown Management Holdings Company Limited annual report. Greentown Management Holdings Company Limited offers a diverse range of businesses and services. At its core, the company provides project management services in China, specifically catering to commercial projects through its Commercial Project Management segment. In addition to this, the company also operates in the Governmental Project Management segment, where it offers property development management services for government-led initiatives such as resettlement housing and public infrastructure projects. This highlights the company's ability to navigate complex government projects with ease. Furthermore, Greentown Management Holdings Company Limited provides construction design and consulting services, which is a crucial aspect of its operations. The company also offers other services that are not specified in detail, but are an integral part of its overall business offerings. Overall, the company's diverse range of services makes it a comprehensive provider of project management solutions for both commercial and government-led projects in China. Greentown Management Holdings Company Limited maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Greentown Management Holdings Company Limited trades at a lower price-to-earnings ratio of 7 times and a higher price-to-book ratio of 1.11 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The company maintains a moderate leverage profile, with liabilities making up 42% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 20%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline in a company can be attributed to several key factors. On the positive side, project management service projects have been a significant contributor to revenue growth. Government projects tendered by the group before August 2020 have also contributed to this growth. Additionally, construction design and other consulting services have played a crucial role in driving revenue upwards. Furthermore, an increase in project management fees due to the company's continuous leadership in scale, optimization of newly expanded structures, market share increase, and business volume increase in key cities has been a major driver of revenue growth. On the other hand, revenue decline can be attributed to several factors. The decrease in revenue of 9.3% is largely due to intensified competition in project management services, which led to a 9.3% decrease in this segment. Other services also saw a significant decline of 13.6%. Net income for the company has experienced a significant decline over the past period. The data reveals that net income decreased by as much as 47.7%, indicating a substantial drop in earnings. Furthermore, an additional analysis shows that net income also dropped by 27.4%. This downward trend suggests that the company is facing financial difficulties and struggling to maintain its profitability. The compression of profit margins has also contributed to the decline in net income. The gross profit margin rate decreased by 9.9 percentage points, resulting in a rate of 39.7%. This significant reduction in profit margins indicates that the company is experiencing increased costs or reduced revenue, leading to lower earnings and a decrease in profitability. The company's financial performance is a testament to its ability to generate significant operating cash flow. According to various sections of the report, the net cash inflow from operating activities stands at RMB 415.2 million. This substantial amount indicates that the company is successfully converting its profits into cash, which is a crucial aspect of any business. The consistency in reporting positive operating cash flow across different pages further reinforces this notion. Whether it's on page 1 or page 20, or even page 27, the message remains the same. The company is generating sufficient cash from its core operations to fund its activities. This internally generated cash flow has become the primary source of funding for the business, underscoring its financial stability and resilience. In conclusion, the evidence suggests that the company is indeed generating positive operating cash flow, which is a vital indicator of its long-term sustainability and growth prospects. The company's financial performance has shown a notable improvement in its debt obligations. A significant decrease in total interest expenses is evident, with a reduction of RMB 2.24 million on page 13. This decline indicates that the company has managed to reduce its financial burden associated with interest payments. Furthermore, a closer examination reveals that the interest expenses on a specific loan from a third party have also decreased by RMB 103,000. This reduction suggests that the company has successfully negotiated more favorable terms or has made timely repayments, resulting in lower interest charges. Overall, these changes indicate a positive shift in the company's financial health, with reduced debt obligations and lower interest expenses contributing to its improved performance. The performance of the company's segments varied across different regions. In terms of project management business, it performed well in some areas but struggled in others. On page 9, this segment showed strong revenue and results, with RMB 3,120,143 in revenue and RMB 531,244 in segment results. However, on page 25, the same segment experienced a decline in revenue by 9.3% and a decrease in gross profit margin by 9.8 percentage points. In contrast, the Others segment performed relatively well across different pages. On page 9, this segment had a modest revenue of RMB 55,611, but still managed to achieve positive results with RMB 59 in segment results. Similarly, on page 10, the revenue for this segment was $5,792, indicating steady performance. Furthermore, on page 25, the Others segment showed significant improvement with a revenue of RMB 54.4 million and a gross profit margin of 63.8%. Overall, while the project management business experienced some setbacks, the Others segment demonstrated consistent growth and stability. Management has expressed confidence in the company's financial management capabilities. They emphasize that the treasury management function is closely tied to both long-term and short-term objectives, ensuring a balanced approach to financial decision-making. Furthermore, they highlight adherence to sound corporate governance principles, which underscores their commitment to responsible and transparent financial practices. The company has made significant strides in its business operations through strategic acquisitions and divestitures. In terms of acquisitions, one notable transaction was the equity acquisition of Zhejiang Greentown Shangli Construction Management Co., Limited. This move is expected to bring about new opportunities for growth and expansion. In contrast, the company's divestiture strategy has been relatively conservative, with no notable transactions reported in recent times. This suggests that the company may be focusing on consolidating its existing assets and operations rather than divesting non-core businesses. The company has a history of paying out dividends to its shareholders. In the past year, it paid a final dividend for 2024 amounting to RMB 482,400,000. Additionally, an interim dividend was paid in 2025 worth RM 152 million. For the current year, the company has proposed both a final and special dividend of RMB 267 million each. On the other hand, there is no record of share buyback activities by the company. This suggests that it has chosen to distribute its profits in the form of dividends rather than repurchasing shares from the market. That concludes the financial summary for Greentown Management Holdings Company Limited. Feel free to comment below, and I will be happy to answer them when possible.